Gleanings. He is Chris. I am Jesse. Chris, I want to do something just real quick, a little different. Recognize a few subscribers here recently that have joined the club. We've got Elizabeth Yoon, Tom Bond, Ken Perkins, and Perry Pullen. Thank you all. We'll shout you out if you do it as well. But today, we are talking...
the Valentine's Day edition of NVIDIA.
We're talking NVIDIA. There's a lot of love for NVIDIA right now, so Valentine's Day is appropriate.
There is. This first chart caught me just kind of, look. And look, I'm not hating on NVIDIA. You're not hating on NVIDIA. Look, great company. AI is real. There's no question. But, I mean, there are some real tangible examples through history of companies that ultimately were good companies that are still around that got overdone in the process.
Yep.
And so this first one, NVIDIA is attempting to touch the sun. Never seen a MACD like that. And MACD refers to the chart at the bottom. And essentially what it's saying is the amount of buying pressure to the upside is just stupid in this example. But let's just look at some comparative examples, okay? First, you found this one with Charlie Bolello talking about comparing NVIDIA to the energy sector.
That's right. It is bigger, he says, in market cap than the entire energy sector in the S&P 500.
But the energy sector has $147 billion in net income when NVIDIA has $19 billion.
So that's example one. We go to the next, and NVIDIA just passed Amazon to become the fourth largest U.S. company.
And NVIDIA has $45 billion in revenues, and it's going to be closer to $58 billion by the time you finish.
Well, this is trailing 12, but yes,
right.
After they report, it'll probably be a bigger number.
Right,
That's
but Amazon's are 10 times $58 billion.
Right.
So, I mean, and of course, Amazon's more diversified as a business than NVIDIA is. I mean, not only do they have all those sellers, they've also got, 4 or 5 different lines of business, AWS, and obviously their sales.
And I've heard it suggested that Amazon is trying to create their own, super chip,
right?
Because they're tired of paying NVIDIA's prices,
right?
Them and Microsoft and others. So, yeah, there's that.
Here are 2 more examples in the next chart. NVIDIA is now worth as much as the entire Chinese stock market.
China's had its problems. I think they're in a drawdown over the last year, and obviously NVIDIA has been on a meteoric rise. But it also is noted that NVIDIA has gained a total of Tesla in the last 2 months, $600 billion in market cap.
Going back to China, I mean, China's not exactly valued at some great PE multiple. It's like our friend that said to us one time, if you liked it at 11, you're going to love it at a PE of 8. I mean, China's probably more like I don't even know what China's PE is, but it's single digits. But the point is that it's more expensive than a lot of major parts either of the globe or entire sectors like the energy sector, which seems rather ridiculous.
Maybe Temu will push up.
God, those commercials were horrible.
Push up China's valuations.
God, they're horrible.
And one last look real quick, and it will lead us into our next conversation, but NVIDIA is up 1 Intel in the last week. Now, that's from last week. But they haven't slowed down since. So
let's start with Intel's chart here. Intel, I mean, if you look at Intel, so Intel was around in the 2000s. And again, we're not hating on NVIDIA. This is not a .com comparison. What it is a comparison of is companies getting ahead of themselves relative to reality and what they can do, okay? So here's a chart of Intel. Same business, okay? Microprocessors. Right? Okay, here's an example of them running up in 2000 during the end of the .com situation and where they are today. I mean, they're still a publicly traded company.
Yeah. Still a highly valued, $184 billion, I think, market cap.
This chart is of 8,584 days. Okay? And the stock's still down 43% from its high point. So can it happen? Here's example number 1 of yes, it can happen, okay? Let's go back and look at Sun Microsystems. Here's the quote from Scott McNealy, founder of Sun Microsystems. And this is from Business Week in 2002. When the stock hit $64 a share, okay? At 10 times revenue, to give you a 10-year payback, I have to pay you 100% of revenues for the next 10 straight years in dividends. that assumes I have zero cost of goods sold.
He has to get it by his shareholders as well, he says.
Yep.
Give away all the revenue and dividends.
That assumes zero expenses, which is really hard with 39,000 employees.
Right.
This assumes I pay no taxes. That's very hard. And assumes that you pay no taxes on your dividends, which is kind of illegal. And that assumes with zero R&D for the next 10 years, I can maintain the current revenue run rate. Now, having done all that, would any of you like to pay $64 for my stock? And here in the next chart is the chart of Sun Microsystems where it caps that $64. Okay.
Yep.
And by the time he shared this, the stock was down sub $10.
Right.
But I mean, it just shows that stocks can indeed get ahead of themselves. Now, here's the thing. With that scenario, he talks about 10 times revenue. Here are NVIDIA's revenues.
Yeah.
40 times revenues.
Yeah. Again, likely to drop on it's next week, Wednesday. They'll report their Q4 earnings, and you can see in that line there of price to sales ratio that from Q1 to Q2 of last year it grew, and then from Q2 to Q3 it dropped, and so there is some expectation that perhaps.
If they sell more and they exceed expectations, that's fine. And the other thing you can notice up in the top
big
with
numbers.
the graph, the price to earnings has been coming down. Mm-hmm. The price to cash flow has been coming down. Those are all good things, but they are still elevated.
They're still well elevated.
Yeah, and that's at least a point. Like, this is real, okay? Mm-hmm. I get that. But at the time, the whole notion of networking, right?
Well, what Intel was serving, or a Cisco, for example, is the internet. And we've said it before on a broadcast like this, is that the internet, for all the bulls of the .com era, again, not comparing this era to that, but for all of the bulls as to what the internet could become, they underestimated what it became. It became much bigger than they had ever imagined, and yet in the hype, good companies got pushed up in valuation. They're still around, still doing good work, but it just was unsustainable at the prices that they had gotten to.
So let's look at one more. So Cisco Systems. So Cisco Systems is still around. I just had a friend retire from Cisco. He was key accounts for Cisco Systems for one of the 5 money center banks in the United States. Mm-hmm. Okay. And he just retired from them, like in the last 6-9 months. Okay. Here's Cisco. In the last 8,737 days, the stock from its peak in March of 2000 is down 39.6%. Still.
Yeah.
And there's still plenty of networking going on.
Right.
I mean, how the heck do you think we've got all this interwebs?
Right.
Right? Like, it's not.
Cisco, plays into that. There's no question. So yeah, one other look just to try and balance thing. Yeah, to try and balance this out is Oracle did acquire Sun Microsystems. You showed that their stock went up to a big high, fell apart, and just you can't find their stock anymore. It's because Oracle acquired them back in January of 2010. And, well, Oracle's done pretty well for themselves.
Yeah, Oracle's done fine, right?
Yeah.
Now, Oracle has more businesses, software business, database business, et cetera. But suffice to say, yes, I mean, we can't show all these others without showing
a little balance.
That's right. But, of course, what did Oracle do? It bought Sun Microsystems at a reasonable price.
That's a great way to close that. So, Chris, today we got the CPI number. So let's talk just briefly on that. You shared this this kind of tweet from Bespoke. January 2024 CPI year over year is expected to come in at 2.9. If that happens, it will end a 33-month streak of 3% plus readings, the longest in 30 plus years. Tell me, what did the CPI number come in this morning?
We're going to have to wait another month to break that streak. They came in at 3.1, so they were a little bit hot. And, I mean, the markets reacted to that some this morning. Really, the bond markets reacted probably more than anything.
That's right.
Bond market's kind of been looking like it's sort of feared some hot numbers. I mean, we've been pretty consistent talking about the last parts of inflation. And we'll talk about this more next week, kind of in more visuals. But it's not easy getting all this back in the bottle, right?
Yeah.
And here's a post from Liz Young from this morning, just talking about how it came in a little bit hot overall. you can see the primary piece that's kind of been negative in the last 6, 8, 9 months has been energy. And the real question is, with, again, sub 4% unemployment rates, if we're not going to have a recession, do you expect energy just to continue to be cheap?
Roll over,
and,
right.
Maybe you've heard there's a little bit of stuff going on in the Middle East as well. While we're probably the main or the largest now in terms of energy production, the reality is that there's still a lot going on around the world. So it'll be interesting to see how energy plays into that. We'll talk more about that piece next week. But the good news is
the good news would be for savers, right?
Yep.
And we've talked about this for quite a while, is that, if you're not getting any sort of decent yield on your cash, there are opportunities. And it seems as though as of this morning that maybe you've got a little bit more runway to get a stronger yield, because as of this morning, the expected first rate cut by the Fed has now been pushed out to June from just a few weeks back. It was March, right? And now that's been pushed back 2 months. Doesn't mean that that's how it's going to happen. The Fed can make their own decision, but this is again, as we've talked about a lot, this is a Fed funds futures of options traders that put odds on this because they're putting money on it.
So at the end of December, the Fed said that they expected reasonably 3 rate cuts next year. The market immediately took that to mean 6 rate cuts next year.
That's right.
And then after Chair Powell was on 60 Minutes, it moved to 5 rate cuts. And now with the hot CPI print this morning, it's moved to 4 rate cuts.
That's right.
So, this is what, the 5th or 6th time this has happened where the Fed said, we think it's going to be this. The market says, no, it's going to be more than that because we know better, and then the market has to walk it back.
That's been the trend of late. Yeah, I think I think there was a period of time where it seemed as though the market got it better than the Fed predictions, and we're not seeing that play out right now.
Not in the last 2 years. It hasn't played out.
Right.
I mean, the Fed's been way more right than the market. I mean, there's the notion that the bond market is the wisest of all markets. But the reality is that the Fed's been more right than the bond market. All right, Super Bowl. This is kind of neat from
a coincidence indicator. So don't take this for anything other than that. But if you were really rooting for
the 49ers
for the better return,
it
would
seem for the 49ers.
You ought to have been rooting for the 49ers. But the Chiefs don't have a bad track record either.
Nope.
As it shows here, the average return from the Super Bowl to year end, Chiefs have a up 10.9 average over their 3 Super Bowl winning years. Not that it means anything. It's just something fun to look at.
Right.
So now we had some other fun things to look at. What was your favorite commercial of Super Bowl?
By far, hands down, the winner was Kawasaki. Without question. Guy gets into ATV with his buddy, cranks it up. They're clean cut. They both grow mullets immediately. They go past the animals. The animals grow mullets. They go past Stone Cold Steve Austin. He grows a mullet. And he's like, "Thanks, guys." That was great.
There's a trend between you and a little bit of a redneck theme. You used to be a Hemi commercial fan.
You're about to find out.
Find out. That's right. I thought you were Dunkings all the way between the Ben Affleck and he called him Touchdown Tommy on the keys.
Yeah, that was good.
But my favorite was since Sunday I've had this feeling like I need to buy a BMW as best I can with
you do that,
talking like walking. So
that was good too.
That was pretty funny. So anything else you've been up to?
Just continuing to watch
True Detective.
Night Country. Oh God.
Yeah.
Don't watch it before you go to bed. Holy cow.
Yeah.
It's good. You watch anything?
I haven't been. Just been busy with other things. So.
Yeah. All right, friends. Thanks as always for watching. We're grateful to you. Please do click the subscribe button. Please click the bell to notify when we post. We appreciate y'all watching. We appreciate our new subscribers. Thanks so much. Look forward to seeing y'all soon.